Hey, good morning. It is Tuesday, December 8th, and here is the disclosure required by law, the legal disclaimer, and risk disclosure. Past results are not indicative of future results. Futures trading contains substantial risk, and the hypothetical performance disclaimer. Hypothetical performance results have many inherent limitations. Back testing does not mean that you're going to get the forward walkthrough results. Yesterday, we had a consumer credit report that should be worrying Janet Yellen. Janet Yellen should be very worried about this. That's a huge miss on the consumer credit number, meaning people are not spending, and they either are not spending or they're not qualifying to spend. So that means the machine of a consumer-driven economy is slowing down. So we're not experiencing growth. Tuesday, our day today on the calendar, we have Redbook and Jolts. Now, Jolts can cause the market to move. That's why I'm showing it to you. Sometimes I look at oil and I'm like, what? Why is this moving? It's because of Jolts. So tomorrow's crude inventory should be very interesting. We may get a pop tomorrow. They're expecting a turnaround in the inventory number. So let's look at the crude market yesterday. We broke decisively through support, and that's about as decisively of a breakdown as you can get. So we crunched through our multi-year low, and not since 2009 have we been this low and beyond. So what I would like to remind everyone is just realize that this can go sideways fast. Today looks like it's going to be a back inside day. It's already retracing up. So it can go sideways and just chop around like the normal crude does. So be very careful. I would get interested on new lows or bounces off the 50% line from the previous high low. I'd be watching that 50% line, half back. And here is my anticipated arrival price if it gets down there. Here was the market, weekly, daily, 60, 15, all day in the red yesterday, and here it was. This is my mini value on my profile, and I have different triggers that I use to get me in a trade, but mainly I've been trading volume profile. When I get to a value high or a VWAP, I sell. And when you break the standard deviation 1, that's your trigger to go for a long entry. And here's your standard bull flags or bear flags in a downtrending market. When you break the flag, you continue for another run. So we had some great opportunities yesterday. Again, the main opportunity comes pre-market, and then we crunch sideways and up. So you have to pick these spots carefully. If you took a trade at the first touch of VWAP and held it, that would have been a $2,000 trade. Who would have known? I mean, really. The inclination is to take it off at the standard deviation band or the initial balance. Certainly the lower standard deviation band. So Who would have known to have held this all the way down? And so price came exactly to this lower standard deviation band. And then crushed through. You would think it would be over, but then it broke through that. So we really moved down yesterday. That's the decisiveness of this move. Let me show you on my 30-minute bar how far it went. We came through this yesterday's swing high low, came through, hit the 61%, came and hit this 127 and held that, and then broke through. It didn't make the 161, it stopped at 150. And so the algos are tied to 150 in crude. Let me show you that. I can find my leader. Here it is. So if you change this from 161 to 150, and there you go. This is where, here you go. See, 150. That's the number. That's the magic number that the algos are tied to. So we've got 23.6, 61.8, 127.2, and 150. All right, make our adjustments. You got to go where the algos go. Right now we're getting a little bit of a bounce up. We were so oversold. And I'm looking for a retracement up to this 38.50 level. If not, the 39.18. I don't think we're going to make it. Well, we could just retrace all the way back up here today. Today looks like it's starting out to be an inside day, so it's moving up. Just be careful, we are in a downtrend. And this sent the other markets down. The British pound is still selling off. That's from Draghi last week. The ES sold off yesterday. Let's look at that. It did not make nearly as much of a move as crude did, but here's my direction guide template. Keeps you out of the chop in the middle. That's the trigger. Here's the signal. You know that you're still going short. And these are, you know, big candles for the ES. These are 18 ticks. So, and here's the trigger. So, I'm not sure if this is a turnaround. Yesterday I looked at this and I saw the weakness of this up trace, and we got a halfway sell-off yesterday. So we're sitting in the middle. We're below the 25% value at the moment. So we'll just have to watch to see where price responds to the previous 25% value if it stays below it. Short down to 2051. And if it breaks above it, I'd like to see it break above 2077 and for long back into this value area here between 2083 and 2090. We could just go sideways, bounce off the 27.7 and come back down. So I just expect more choppy right now. It's not directional, it's sideways. So be careful trading the E-mini. Do your up and down trades. I've got a new logic signal to take me from the upper 2 and lower 2 deviation bands on the VWAP. So I can go from point to point to point to point, range trading. So be careful. It looks like it might be a inside day in the markets today. We'll have to see how this plays out. Yesterday and Thursday and Friday were great trading days. So market might be going into its rest period. Who knows? Who knows? Just be there at your stations, ready to take advantage of these directional trades when they show up. And that means weekly, daily, 60, 15, all in the same direction. And then pull that market up and go hit it. Y'all have a great day. Thank you so much.